What's up? I'm Dan Fredenberg, and this is another chance encounter. Today,
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined with Harry, and it's Zegarra, right?
Yes, Nima Zegarra.
Nima
Yes,
Zegarra.
that's
Okay,
cool.
we'll do the whole thing. Awesome. So,
Yeah,
all right. So, and how you doing today, Harry?
very good. And thank you so much for having me in your show.
Definitely my pleasure. And I got some great news for you, Harry. Today, we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means syndicators, investors, buyers, sellers, sponsors, and all that kind of stuff. And you may ask yourself, why would you do that? And the answer is if you've ever been involved in an off market deal, a private deal, sometimes called a 506B syndication, then you ought to know that the SEC requires that you have documentation of your prior substantive relationship, or else they will get ants in their pants. And when you get audited, then you're going to be in big trouble. So that's what I'm up to here. And the main benefit for you watching the whole episode is that you will learn how to effectively communicate on the subject of commercial real estate, and you'll know how my guest fits into those deals. But before we talk too much about real estate or your business, Harry, do you want to say a thing or two about yourself?
Oh, yeah, thank you. And so I'm a pulmonary and critical care physician, originally from Peru, from South America. So my wife and I were both are physicians. We're here in the US for already 15 years. I'm still a full-time physician, and my wife now is just mainly on the side. We started actually in real estate about 7 years ago, initially in residential real estate with long-term rentals. And about like 3 years ago, we jumped into commercial real estate, just mainly in syndication apartment complexes.
I love it. I love it. So we can get started. So the first segment that I always do here is the 5 distinct motivations. Before I do that, I got to say, but wait, check your 8. Harry, I don't know if you can see through the camera and into the user's device, but down there at their 8, there might be this hideous subscribe button.
Yeah.
It's really ugly and it's embarrassing to everybody. Okay, it's a stupid joke. Anyways, the
No
five
one is
distinct,
threat.
right, exactly. I got to stay subtle. But anyway, the 5 distinct motivations. I've spoken to hundreds, maybe even a few thousand. I've lost count at this point. How many commercial real estate players I've spoken to now, but everybody has their own unique why for getting involved in doing this and doing their next acquisition. And even though the why is unique at the end of the day, I found they fit pretty neatly into these 5 categories. And the reason why it's important to know my guests' motivation, or other people in commercial real estate, what's their motivation for doing it, is because these deals take months to close. They take years to go full cycle. And so you need to know that people are motivated not to just throw in the towel. So the first one of the bunch is preservation of purchasing power. And you might ask, what's that? Well, some people, they don't have a W-2, they don't have a job. The way that they pay all their bills is from the proceeds of ownership. So they have a portfolio of assets, and then the proceeds from ownership is how they survive. But in that situation, you might ask, well, why would they bother making another acquisition and going through all that hassle? And the answer is there's a few scenarios. One is if inflation is eating away from the purchasing power of the cash flow, then it's time to make another acquisition. And then the other times are when it's a distressed property, it's an asset crash or something like that. And so you can buy at a steep discount, and that way you protect your investment just by buying it for cheaper than market value. So that's what some people's motivations are. I can't wait to be in that position, but I'm not there yet. Where I am is trading time for wealth. I'm suspicious that Harry is going to be on the same page as I am on this one. This is my primary motivation because I got a background in tech. And when you have a background in tech or medicine, you're a high salary, high wage earner. And that means you're paying more in tax than anybody. Back in 2014, I started using all my CRM skills for an Ohio firm, sending out millions of emails every single month and doing millions of dollars in revenue from coaching, while the coach himself was flipping 10 houses, doing 10 house transactions a month for years before he hired me. And so when I saw what he was up to, I was like, there's got to be a way for me to pivot so that I'm getting rewarded in the form of deployed capital, and then I get access to equity multiples and whatnot. And that's what I decided to do, is figure out how can I get in these GP teams, get involved in these deals in that way. But that's too subtle for some people. It's too abstract, especially for many youngsters. What they're more interested in is taking control of their schedule. And that might mean hustling like crazy right now and then hopefully fast tracking their retirement, retiring a bit early. But other people, they just want to work fewer months per year or fewer hours per week or fewer weeks per month or something like that. And a lot of people who have this motivation of scaling back and dialing it down, they think it's a hidden agenda of everybody, but I assure you it's not. Some people are fueled by ambition. They want to buy their entire hometown. They want to get that generational wealth to make sure that their great-grandchildren never have to hold a day job. And that's why they're just going to keep on making acquisitions and hustling into their 90s, which also makes them a fantastic member of your GP team because you know they're sticking around. But that's also similar to this fifth group, the last one, but they're not specifically focused on their own family or legacy. They've picked a sector of society, or maybe it's animals, or the environment, or they want to send people to space. Who knows what it is? But at the end of the day, if you want to make a really big impact, there's a big financial component to that, and that's why some people are making these acquisitions. So, Harry, of these 5 different motivations, what combination of them would you say describes you best?
Yes, and yeah, no, I mean, like there are 2 of them that resonate the most with me and my wife actually. Yes, so one of them is like to have a little bit more freedom, right? Like the freedom to choice and to do uh, whatever you want with your time and spend that precious time with the people you love, right? Like so again, like, and it's not that I mean, like I don't like medicine. I mean, I still love medicine. I want to continue being a physician for a long time, but I just want to do that on my terms, right? Like, and the second part, as you mentioned, also is like to help people who need it, right? Like so, and we sometimes don't realize that, like, so we're in this business in this field, and we also move the economy, right? Like so, we also help people to find a good place where to live, and in our case, also, like in particular, like my wife and I, we both are from abroad. We both are from Peru. You can imagine it's a third world country. So we have a couple of projects down there that we love to give back to people. Again, like we have been blessed and we have been very grateful with all these things like we have accomplished, right? Like, so it's time for us to give back. And we feel real estate is a great vehicle to do that.
I love that. And of course, you said what you did about Peru. So you mean specifically that it's destitute, right? Like because you said terrible, and I'm sure it's a nice place. It's just
No, it's great. Yeah, no,
yeah.
it's our country is like, again, like we love it, but again, like there are a lot of needs. So yeah, I mean, we'll love to give back.
Absolutely, absolutely. I
Yeah.
just don't want you to get canceled by the Peruvians in the audience.
Oh, no, I didn't say that. Yeah.
Anyway, good stuff. So there are plenty of risks on the internet and on every business, and commercial real estate is a business just like any other. And if you've ever been involved in one of these off-market deals, these 506B syndications, then there should be a securities attorney in the mix. If there's not, that's a huge red flag. You should run, you should worry. It's bad, bad, bad. But one of the things that the securities attorney will insist on is that everybody who's involved needs to fill out this super invasive questionnaire, all full of financial questions. And when I was going through it, there was one question that jumped out to me as a person who's got education experience and building all these different questionnaires and tests on the internet. The one that jumped out to me that I thought it didn't give me usable information. It was the tolerance for risk assessment. So I made my own one, and it's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So, Harry, it can be inside real estate, it can be outside real estate, it could be both. It's up to you. What's too risky for you?
Yes. So one of the things is like I first I want to be educated in any field, right? Like so if I'm not educated for me it's something risky. So then when I'm comfortable in the field, also I want to know about like the operator or the person who's running the show, right? Like that's probably the most important part, like for any business, like especially in real estate in this moment, if you can imagine, right? Like and third, I try to be in any kind of business or investment what I feel is a necessity, right? Like, so for example, housing is very important. Food or clothing is very important, right? Like, so I try to stay away from non-discretionary like investments, right? Like, I mean, I respect that like from other people, right? Like, and things like, again, like I still don't understand, like, for example, like crypto or things like that. I mean, I respect other people who do that, but I mean, for me, I don't completely understand, like Warren Buffett says, right? Like, so I try to stay away from that.
I love that answer. And with crypto, the biggest problem is that it's an appreciation move. You know, buy low, sell high, and if it just drops and drops, then you're just in a bad situation. Whereas in real
Yep.
estate, you're buying it because it makes money, so there's money in your pocket coming in before you have to actually sell it or whatever. Whereas you don't make any money for just holding your crypto. So that's a great answer. I love it. And it brings me to the next question. This question here, I was a little bit concerned about throwing this in when I first started this series, but and I'll tell you why. Many people who you'll see online on social media and whatever, the role that they're playing in these commercial real estate deals is weighted heavily on the public relations side, the marketing side, and that sort of stuff. And they are not going to be the same person who is a spreadsheet junkie. They're just digging and underwriting and digging into that. So not everybody is going to understand every deal metric. And every underwriter will look at these different metrics that I have and say that, well, they're all important. But when there's a headliner metric or two, I think that's really important. So you're speaking the same language as the person you're discussing it with. And so I'm going to go through all of them, and then Harry, maybe you can pick your top three as far as which ones sing to you the most. And for anybody in the audience who is not watching and only listening, I'll read these out. And the first one's cash on cash. Next, IRR. Then cost per door. That's especially for apartment complexes. Net operating income, or NOI. Going in cap rate. In other words, the difference between the standard cap rate where the property is located versus what you're able to buy it for. Next one is especially these days, the interest rate on the loan is going to be super important. The occupancy rate or the vacancy rate, they're inverse. The next one is average income in the locality where the property is located. Then the amortization period of the loan, the market, the difference between the market and in-place rents, the population growth in the area where the property is located, the sponsor record, which is how many deals have gone full cycle, how many are on the go. Harry already mentioned that one. Next is the waterfall split or exit strategy, basically what exactly is going to happen after the capital is returned. And then the last one I have here is DSCR, which is debt service coverage ratio, which is how much of the net operating income or how much of the revenue from rent and amenities is going straight to the loan. So, Harry, as far as these metrics, what are the ones that really sing to you?
Yes, absolutely. I mean, like the first one by far for me is a sponsor record, right? Like so, that's the jockey of your horse. That's the one who's gonna make or break a deal. That's the most important for me by far. Then the other things like are of course important, right? Like like the second and third, like I would pick like the NOI, right? Like I can like because like I want to know how positive or negative am I going into like a deal. And the other one is the DSCR, right? Like so everything like in investment is a balance, right? Like between risk and profit, right? Like so, and that tells me a lot of how risky my investment is gonna be, right? Like so, if I'm gonna be able like to pay to be able to afford to pay like the expenses and especially like the mortgage or the loan. Yes, that's very important.
I love that answer. I'm eating it up like a subscribe sandwich.
That's awesome.
It sure looks delicious, doesn't it? And it's very subtle, I know. But it's my reminder that it's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And if you're looking at it and you listen to the different roles and you're like, wow, I really need one of these cubes, you can get it for free. It's at dandoesdeals.com. And like a complete dummy, I don't even ask for your email address. That's the cardinal sin of marketing. You never ever give away your freebie without asking for some sort of contact information. But I want to make sure that there's nothing standing in your way for printing this out, practicing, explaining these different roles, because what I noticed when I got into commercial real estate is that your career in this industry is going to depend on your ability to communicate effectively. So that's why I take a couple minutes in every episode and I go through each of these roles. And the additional benefit is you get to understand better how my guest fits into these deals. Let's start by talking about repositioners, who are acquisitions people, and they do a bunch of paperwork looking at a bunch of different deals. What are they doing with that paperwork? Well, they're underwriting the deal. They're doing the math. They're figuring out, first of all, is this property even making the amount of money that the seller / broker is claiming it is? Because you can play lots of games with the numbers, right? But the reason why they're really doing all these numbers is they're figuring out how can they make the property more profitable than it is right now. And there's a few different cards up their sleeves to pull that off. The first one is that repositioners always have a vast network of financiers. These are lenders. These are people who only deal with paper and money and the owners of the building. They don't deal with tenants or any of the typical issues or anything like that. And the reason why the repositioners all need to have a vast network of financiers is because if they can secure a more advantageous loan, in other words, cheaper money, that goes straight to the profitability of the building. So that is a key part of what repositioners do. But of course, the next place they're going to look is operations. They're going to make it more efficient, look for those Benjamins and stop them from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns or shoveling snow in my case. What I do for my teams, especially because it's 100 units or more that I focus on because I'm remote based, the parts that I add personally are for the marketing and the automation. And when you're in 100 units or more, you're generally outsourcing to a third-party property manager. So you really have to say, like, what's a person who, I don't know if you know this about me, but I'm from the internet. So the question is, what exactly am I going to do? Well, if you understand that vacancy is really the enemy in any sort of real estate, then if the third-party property manager has trouble filling those units, then somebody with some serious marketing chops needs to step in and get those filled. So that's what I contribute on a GP team. But of course, there's only so much you can do with operations, so much you can do to make it more efficient. So the next place the repositioner generally looks is to get a contractor team involved, which is to do a value add, do those renovations, make the property and the apartment units or just whatever the real estate is, make it nicer and more desirable. But of course, you can spend endless amounts of money on contractors. You could go ahead and gold plate the toilets, but you're not going to get a return on investment. And it's not even just that simple. If you are from the internet, just like me, then you got to have somebody who can keep an eye on them, make sure that they're keeping to schedule, they're not using subadequate materials and whatnot. And so you need boots on the ground. You need a local. You need somebody who can be there in an hour or two, because categorically, that won't be me. I'd like to be, but I'm geographically challenged, I guess is the way to put it. I'd still be at an airport in an hour or two, whereas the local needs to be able to get there at a moment's notice in a short amount of time. But when the repositioner has assembled this team and they found this ideal property, let's go through a hypothetical, okay? So when the repositioner, let's say it's you're a physician or a surgeon or an attorney or an engineer or something like that. Let's say you decide, hey, well, I know how to buy a house. What if we do a similar thing? Each person puts in $100K or something like that, and we take over the 350 unit apartment complex down the road. Well, when you turn around to the financiers and have the conversation of, hey, I want to buy this apartment complex, 350 units, tens of millions of dollars. You don't have, I don't know, tens of millions of dollars that you want to lend us? Well, there's one part that I haven't mentioned yet. And if you're in a coaching program, a guru program, mentorship program, You're going to want to listen carefully to this one because this is the part that I think people really gloss over. The financiers are going to ask you, who's your KP? Who's your sponsor? What's that all about? So the reason why you're not going to get accepted for that commercial loan in my little hypothetical there is because somebody in the fold has to already own a similar asset so they can prove to the bank that they're not just going to run it into the ground. That's called the sponsor or the KP. And generally, they're also going to, so they have to have a similar asset, but they also are frequently put in for their net worth so that they can sign for bigger loans. So you need a certain amount of liquidity to pull it off. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all that, you got yourself a commercial real estate deal. So Harry, as far as you being a physician, that means like you're going to be doing your underwriting, and that makes you a repositioner. You're going to be deal finding from other sponsors, and then of course you're going to have a big financier network, especially from your peers. I'm sure people who like you're the guy with the ear to the ground, and other people are further removed and they need somebody's help. But I don't want to put words in your mouth. What boxes are you going to check most likely in your next deal?
Yes, absolutely. So we're here based in Dallas Fort Worth, right? Like so we're kind of like in the middle of real estate, like if you may say. And we actually have a couple of deals here, like locally in Fort Worth and one in Waco, which is an hour and a half. So we have been boots on the ground for these deals. I have also participated in the asset management. I mean, not just by myself, like because that's a full-time job, as you can understand, but just in the team who does the asset management, right? Like because of my background also as a physician. We have participated also like as a keep like as a KP, right? Like so because of our liquidity and net worth, we also help together with our KPs like to be able like to get those loans. And of course like the last part is like the education that investor like relationships and raising capital from other investors.
Exactly. That's wonderful. Great answer. And that brings me to the buy box. And when investors or syndicators, anybody who's a player in commercial real estate asks you, what's your buy box? What's your ideal property? What's easier to say yes to? We're really asking about three main things. The first one's geography. Where is it? Which states? Which counties? Possibly even which neighborhood. It's definitely going to matter. The second one's going to be size. Most of my guests on this show are in multifamily, and the way that you define the size of an apartment complex is by the number of apartments, the number of units. And the reason why it's important for us to know what the unit count is because the type of group that's going to take over 10 unit apartment complexes, it's going to be completely different from the type of group that's going to take over 100, 150, 350 unit apartment complexes. So that size definitely matters. And of course, other types of commercial real estate will go off of square footage, like some others, but many of them have a similar way. So that size definitely matters. But the third one is usually called class. I don't like that term. I call it desirability because they split it into two completely different things. The first one is condition. The second one is area. And when you're talking about condition, it means how old is the building? How beat up is the building? What sort of luxuries and amenities are there? I call it desirability. So I think that makes it pretty obvious what that is. So that's the condition. But when you're talking about the area, of course, because we're talking about multifamily, the school districts are also going to matter a lot more than other types of commercial real estate. So what are the school districts like in where the property is located? Then, of course, there's the crime rate that matters in every single type of real estate. But I want to go back to the famous saying that real estate brokers love to say, location, location, location. I don't think that's a good saying because it doesn't really inform you about much. What they really mean is traffic, traffic, traffic. If a gazillion people pass by a certain property every single day, that's going to increase the desirability. And so that's what the area is all about. But the area and the condition are both ranked the same way as in grade school, where you have A plus at the top, and then you have A, and then you have A minus, and then B plus, and so on. So Harry, you already mentioned some of the geography with your group, but what's the rest of your buy box?
Yes, absolutely. So in geography, right? Like so we focus mainly like on the Midwest, in Texas and also in Arizona right now. We have invested in the past in Florida and Georgia, but again, like you know, like in Florida, there are some headwinds, like because of insurance and problems like that. And in Georgia, actually, like around Atlanta, there are some counties that are not completely landlord friendly. So I mean, like there are also like some stories about that. So in terms of like the size of the building, right? Like so, we usually aim for 80 units or more, right? Like because of the economies of scale, and many people don't understand that. Like again, like it takes almost the same effort to acquire a 50 or 30 unit than a 300 units. I mean, like, and like, and again, like the price or like the how expensive is to manage them is even like less expensive, right? Like, and again, like we look for places that are business friendly, landlord friendly, and the last of that, like in the past, we have done more class C value add. We're aiming now more like a for class B or A minus also, but with some component of value add. But again, like we try to decrease the risk a little bit in that case.
I love that answer. That's fantastic. And I'm a big person for semantics. So whenever somebody mentions landlord friendly, tenant friendly, like that, gets my blood pressure going a little bit. Just because I don't think it's phrasing it right. Because like it makes it sound like, okay, well, there are these greedy landlords who want to do all these things, but really like you're buying these investments, okay? And so the question is, like, are you able to make those decisions as an owner, or is the government basically saying, well, I know you bought it, but we own it and we control it? And that's so I think if you
Yeah,
frame the argument that way, I think
yeah,
it comes across.
yeah, yeah. And you also want to be fair, right? Like so, but again, like I mean, this at the end of the day is also a business. Yes.
Absolutely. It's increased the desirability, and then people will pay more with a smile on their face. That's the whole reason why the contractors are there upgrading the units in these value adds. So, my next thing, though, is because the deals are so multifaceted, people in this industry are more eager to help each other out, build new teams than most others. And even though that's the case, nobody's going to be all six sides of the die for any meaningful amount of time. They're going to bear down on two. If they're lucky, they might be able to only do one side, but generally they're going to be like doing two sides at a time. But because of their unique skill set, they're also going to be better at helping some people in this industry than others. So me, with my tech and marketing automation background, the KPs and sponsors are generally who I'm most eager to talk to. These days, I'm interested in talking to more and more of the financiers and, of course, repositioners and locals. For this show right here is the lifeblood of the show. But those are the people who I can help disproportionately the most. Now, Harry, when it comes to people in the audience, if you have any 506B deals, don't mention them specifically, especially if you're talking about investors. If you stick to 506C, then do what you want. But who's out there in the audience who you're most interested and best able to help?
Yes, absolutely. So, I mean, like, we are always networking and reaching out, like, to people in the industry and also to people in the medical field, right? Like, so in terms of our work, right, like, in the business, we always try, like, to connect and to network with people who does the underwriting and the acquisitions and also like the asset management, the ones who are also boots on the ground like us. Right. Like, and on the other side, on the passive investing side, I mean, of course, like any busy professional, but especially someone on healthcare who, again, like, is a high earner or high income professional. And again, like, doesn't have time, like, to do active investments, right? Like, and again, like we physicians, we are high earners, but we also face challenges. Like, again, like we don't have that much financial education. And again, like we are hit with a lot of taxes and things like that. So, right. So that's our main goals.
I love that answer. And so then that turns around to how to reach out. Me, I'm really easy to find, especially on the platform where I ran into Harry. He's super active on LinkedIn, just like me. And I got a really, distinctive last name, so I'm easy to find. But if you have your phone handy and you scan this code right here, that brings you to the FAQs page of 506BME, which is the platform where I offer the service of maintaining and building the IT for your documentation of your substantive relations, so you have that all buttoned up. The idea being, if your laptop falls in the bathtub and all your documentation is destroyed, when the SEC audits you eventually, that's not going to be a good enough excuse for them. You have to have that, and so we can take that off your plate. But Harry, if people want to reach out to you, I know you're so active on LinkedIn, as I said, but maybe that's not the best way to reach out. Phone number, email, website, how should people reach out?
Yes, man. Thank you. So, I mean, like, yeah, we have our website, which is nimaequity.com. Nima as N as in Nancy, IMA, equity.com. And we also are, as you said, very active in LinkedIn and social media and Facebook. We also have our YouTube channel with the same name, right? Like where we share financial education and also mindset and real estate education.
I love it. I love it. And that brings me to my last thing. And now, of course, I'm not a medical professional or anything like this, but I have this public service announcement that I always do, which is for you in the audience. If you've been watching this episode and experiencing searing pains in your eyeballs and like migraine like symptoms, I'm confident it's all because of that downright hideous subscribe button. You can get rid of it for free. And of course, full disclosure, I want people to click on it because if enough people do, then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. And the trade-off for you, just so we're totally clear, is that my videos may show up on your list of suggestions, but quite frankly, you can ignore those suggestions. That's totally fine. I just appreciate the fact that you spent this time with me. Just like Harry, I appreciate you joining me. This has been great.
Awesome, Dan. I really appreciate the time with you.
Sweet. Hey there, are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.